Hello traders, Gary Wagner here. It is 12:40 in Honolulu, 6:40 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 11th day of October, 2024, and this is the evening report for gold and silver, our weekend review. Traders, over the last 10 weeks, we have truly witnessed history. Beginning at the end of July, with gold trading just above $2,400, over the next 9 weeks, we would see gold gain about $300 till it peaked out recently on September 26th, hitting an intraday high of $2,708 and change. From there, gold entered a correction, and then over the last 2 days, we have seen a remarkable recovery. In fact, yesterday, gold gained $21, and today, gold gained almost $27, taking it to its current settlement price of $2,674 and change. We saw equal action in spot gold, with a tremendous rally, a decline, and over the last couple of days, a $21 gain yesterday, and today, a $26.90 gain, taking spot gold to $2,674.20. That all occurred with a neutral dollar. The dollar gained very slightly, 0.07%. taking the index to 102.981. Silver, similar action. The other day, silver gained a tremendous 2.10%, and today an additional 1.15%, taking December silver to $31.73.5. Considering that gold has moved just over $700 this year alone, we have been using Elliot wave, Fibonacci retracements, and extensions to forecast former as well as the most recent move. The end of June, we ascertained that we were beginning a new wave count, looking at wave 1, taking gold up to 2,536, and a very steep correction of 78%, ending our corrective second wave and beginning our long third primary wave. Our third primary wave took us from 2,400 up to the all-time record high, what we are labeling as a primary third wave, and I believe that we recently have completed our fourth wave, a corrective wave, because gold has broken below the 23.6% fib retracement that occurs at $2,634 and has moved up substantially over the last 2 days. One of the techniques that we used to forecast starting and ending point to each of the individual impulse waves was a stochastic oscillator along with our basic Elliott wave model. The basic model has 3 primary rules as well as a template or guidelines that help you produce a correct Elliott wave count. I have just put those up on the screen. To give you an example of how we would use stochastics with our wave count, we are looking at this wave 1 starting at around 2,360 up to the top at 2,530. At the same time, you had your stochastic oscillator move above 80 and cross, indicating that a correction was likely to follow. As that correction deepened, you can see that right around July 30th, when wave 2 terminated, the stochastic oscillator had moved down to about 35 and crossed again. These have helped us delineate where in fact we thought each wave would go. We know that wave 3 cannot be the smallest of any impulse wave, and typically we look for wave 3 to be approximately a 1.618 extension of wave 1, but you can get what's called an extended third wave, which is precisely what we got when the third wave moved just shy of $300. At the conclusion of the third wave, you can see that the stochastic oscillator had moved back above 80, crossed, and then began to move down. Recently, gold corrected, broke through the 23.6% retracement, and then over the last 2 days gained a substantial price advance of over $40, suggesting the high probability that the corrective fourth wave has concluded, and we are now entering our last primary fifth wave, which will conclude a full 5-wave impulse phase. If we are correct, and gold is now in its final fifth primary wave, one of the golden rules is that wave 1 and wave 5 should be about in equal distance in terms of price move, which is where we are deriving our current projection that gold will terminate or conclude this impulse phase at around $2,760. We will discuss that in detail next week.
When we spoke last time, we discussed how we had just finished our intermediate third wave and were in a corrective fourth wave. However, this correction took us deeper than the end of wave 1, therefore invalidating this as a fourth wave. The wave count must look something like this, where the fourth wave concluded right here. If that were the case, then we would have completed our fifth wave up here and would be in a ABC correction. However, there's a more likely scenario, and that is that we are still within our third wave. If that is the case, and we are still within our third intermediate wave, how high can this third wave go? To answer that question, we are going to do an extension of wave 1, and we are going to look at some various levels. The levels include a 1.618 and a 2.618 extension. The 1.618 extension comes in at around $34. So that would be our likely target if, in fact, our projections do come to fruition. That's really exciting because it will be the first time we break above $33 in multiple years. Outside of the Elliot wave count, we have a candlestick formation that could be seen as a three-river morning star, although the candle right here should have been lower in the star position. We do, however, have an engulfing bullish pattern that was confirmed with today's candle, suggesting that higher prices are indeed on the way. If we do, in fact, break above $33 on this rally, which seems possible right now, that is exciting news for silver and could spell even more upside potential. My recommendation is for any silver traders to go long silver at current market values and place protective stops at $30.25.
This has been Gary Wagner
and Joseph Wagner,
wishing you as always good trading. We will talk to you next week for the next evening